Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. My guest this segment is Nick Santiago, President and CEO of In the Money Stocks. Nick, thanks for coming back on the show.
Always great to be back with you, Michael.
Okay, yeah, it has been a real, how do I put this? This has been a real tale of tragedy and woe, figuring out which way this stock market is going to go, up, down, up, down. Give us some insight here.
Well, I've been probing on the short side here. It's been like pulling teeth. The market's still holding up very, very well. Even today, the market's almost seems to be resilient. But one thing I want to point out, Michael, is that we have a lot of rollovers taking place, just not seeing the big sell-offs in the major indexes. Energy has rolled over already. You've seen the base metal stocks such as Freeport-McMoRan and Rio Tinto, BHP. These stocks have been just decimated as of late. So it seems like a lot of money rotation. But overall, with the exception of Apple and J.P. Morgan, until those stocks roll over, this market can still hang in there. And you're seeing it today, even with JPM down 60 cents and Apple down five and change at the moment. The Dow is basically flat. And the Nasdaq's only down, 9-10 points at the moment. So it's really been a struggle to see this market turn down. And we're getting good sell-offs in Europe. We're getting great sell-offs in Asia as expected. But the U.S. markets are still hanging in there.
Okay, all right. Well, and we're going to have to watch and see what happens. Nobody can make it work. Of course, at least nobody that we're supposed to talk about can make it work like that.
I
Just
have
kidding.
To say, I thought we would sell off harder than what we have, and the markets really have hung in there. This J.P. Morgan has been tremendous, and the stock's extended on the weekly chart like nobody's business here, but it continues to be resilient. So, basically, I don't know who's propping it up or who's keeping it up, but it is staying up, and price action is king.
Yep, it is. All right, let's move forward to the energy sector. You want to talk about the XLE?
Yeah, I want to talk a little bit about the XLE today because this has really come down pretty sharply. Now, the XLE today basically tagged the 200-day moving average on the daily chart. So this sector is oversold. But this is another sector that could be setting up to go lower with any kind of consolidation. That's something I've talked about with my subscribers to watch for consolidation. Now, I would not be shorting the XLE here, as I think maybe a little bit of money comes out of the financials and now runs into the energy stocks. So that could get propped up a little bit. But overall, if we get any bearish consolidation, I think the energy sector, the XLE in particular, could be sold again, and we could see some levels go down to the $68 area and possibly down to the $65 area on the XLE, barring any bearish pattern if we get that over the next couple of weeks.
Okay, so if we do get a little rally out of this, where are you looking? The 73 area, something else?
Yeah, right in there, 73, 50, maybe $74. That would be a level I would probably become pretty attracted to selling. And I ultimately would need to see the pattern in there, but I think that's very possible.
Okay, XOM.
Yeah, well, ExxonMobil now is the second largest stock in the stock universe, behind Apple Computer now, and this stock it has held up very, very well. If you just look at it on the daily chart, you'll see that the ExxonMobil has really just gone sideways in a very tight trading range, basically from $88 down to around $84. This one is going to break one way or the other. I don't really foresee ExxonMobil really breaking out to the upside at the moment, so I'm leaning more towards maybe a move up to the highs on ExxonMobil, which is around $88, maybe $89, and then we would start to look for downside in that stock.
Any idea, because I'm looking at the weeklies with the 200-period moving average somewhere around 70, was it 70?
73?
Yeah.
Yeah, I think it has a chance to maybe make that one more surge to bait the longs in on Exxon. And then I do think there's a chance that gets down there. I would probably look around, conservatively first around $80 on any real breakdown, because you have the 200-day on the 200-day moving average on the daily at that level, and then ultimately around that 73 level.
Okay. All right, got it. Going to trade the range on that one.
Yeah, it's really a range trade.
Okay. How about the FCX?
Okay, Freeport-McMoRan, this stock's up 30 cents today. again, a little bit oversold. It did fill that gap, which I was on your show last week and I talked about. I actually had one of your listeners email me, and I told him I would give him the level over the radio, and I did last week. We talked about that gap fill at 36.82. That level was satisfied basically this morning. So this could get a little bit of a bounce, but now there's a bigger gap fill on FCX, which is all the way down to the 34 level, and that is, I think, very attainable. Again, on another bearish setup or a bearish pattern like we just had, we could watch for Freeport Mac to go down. But right now, I do think it's due for a short-term bounce.
Okay. And are you looking to short it back up there around the 40 area, or is there some other number?
It's possibly the 40 area. It's going to really depend on the pattern that is formed over the next week or so.
Okay.
But 40 is a pretty good area. It may be 41. The higher the better, actually. But we'll have to see what kind of pattern it gives us. But ultimately, the way this is shaping up, I do think that gap at 34 is very attainable. Got it.
All right. Let's move forward to the USO.
Okay, USO is selling off today, but I had given my subscribers a level of 38.80 as a place to look for a bounce on USO. Today we got down there to 38.87. Some people caught it, some people didn't. But either way, I'm just letting your listeners know this is a very big support level for USO short term.
Okay. Do you have a target area for the upside?
Probably around 41, but barring any geopolitical events, USO could easily make a new high to around 43, 43.50.
Okay, I'm getting a lot of range trades here. No big breakouts is what I'm hearing from you so far.
Well, that's what we're in. We're in this. You could just look at these markets. Monday was a big up day. Yesterday we sold off. Today we're basically flat after a morning sell-off. But there's a lot of technical damage done on the charts right now, which is not indicative from the action on the major stock indexes.
Okay. All right. Now, you did have a question in the shout box that we kind of touched on briefly, but I probably should be very descriptive with the question, bringing it out from one of our audience members. They wanted you to remark on your opinion if you think that the stock market or the S&P or Dow, NASDAQ, what have you, or Russell, is the stock market is the top in now.
Not yet, but I think we're very close. I think we're very close. It looks like we're forming a rolling top, which sometimes could be a little bit frustrating. As you see, we've come down, basically throughout the month of March, and then we moved right back up a few days ago, made just a slight higher high, and now, we're pulling back again, and then we rally up. But, overall, Michael, the trend is up. Price is still above the 50 and the 20-day moving averages. We have to take out these levels here, these recent little pivot lows, and the most recent pivot low on the S&P 500 was March 23rd. And so we take that level out. I mean, this is still holding up, and I'm short, and I'm the first to tell you this is still holding up. So we don't have a pivot top in place yet. I'm expecting one, but it just hasn't, it hasn't really confirmed for me yet.
Okay. Now, if we had a high on this thing, I want to get into the banking stocks like nobody's business, but let me just clear this up in personal question. Back on the 27th, 1419 on the S&P.
Okay.
If we break out to the upside on that, because I've had some other guys come on the show that if we break out over the recently established highs, mainly because they're cyclical analysts, we've got this window of about 2.5 weeks. If we break out of that, they're looking for a big rally to come as we go into the summer. And then I've had other guys on the show that say, I think it's just going to kind of go sideways because this is the end of the quarter window dressing. What's your thinking the way this thing is setting up now?
Well, if we took out the recent high from the 27th of March, I mean, you have no choice but to look at higher prices in the market.
Yeah.
I think that's the practical way to approach it. That's the right way to approach it. Even today, we have some short trades that are in the money. I sent out an alert to my subscribers to just lock in some gains here and move the stops to break even. You don't want to get too cute with the market. I can't fight the price action. I can't fight the tape. It's been, like I said earlier, pulling teeth with a pair of pliers for the market to go down, and it has held up. We have European problems, we have Asian problems, and the market's still holding up. And you have to respect the price action right now, how it's being done or how it's happening really isn't important. The fact of the matter is that it is holding up. So while I'm bearish at the moment, I think the market is trying to put in a top here. It has not yet happened, and until I get confirmation of it, I still got to be cautious.
Good. All right, let's go on to that J.P. Morgan stock that we want to talk about.
Yeah, J.P. Morgan, as you know, and I brought this to your attention a while ago, it really is the market right now. It's the most important. It's even more important than Apple, which has the largest market cap. As long as J.P. Morgan holds up, the stock market holds up. We've seen this really throughout, I'm going to say, the past 5 months, and J.P. Morgan continues to remain really right at a high, and the stock is very, very extended on the weekly chart. But what I would tell you, traders, is once this stock breaks down to the downside, that's when traders can start to get more aggressive on short trades, because this stock is an indication of the overall market. Even if you look at it today, it put a low in basically at 11:30 this morning, and then it made a series of higher lows on the intraday charts. And right now, the stock's only down 59 cents. So after being down about $1 earlier, so it's resilient. Keep using J.P. Morgan as a stock market barometer. It works, and until that thing breaks, this market is still hanging in there.
When you say breaks, do we have any early warning signal price levels that you're looking at?
Sure. A break of 44 on a close is likely to do the trick. Maybe you have to go with the 20-day moving average, which is around 43.40. But I'm more in the camp. A close below 44 should solidify a move, in my opinion, down to around the 38.50 to 39 level.
Okay. Now, for the listeners that have joined us, we're getting more listeners every day that haven't become aware of what it is that you do. I mean, we talked about the market forecasting, but we didn't bring out that you actually have a trading room that you work all day long. How does somebody contact you and get involved in the trading room and what do they get?
Well, the best thing to do is just come over to the website at In the Money Stocks. If you come over to the website, we offer a 7-day free trial to our intraday stock chat room and also to our research center. In our chat room, we open it up right before the market opens. You'll see all of our charts. You'll get our trade setups each and every day. Also, I do a pre-market video, Michael, which is a free service to everybody if you come over to our blog, and I'll throw out morning gap trades out every morning. And all of my traders take advantage of that each and every morning, and you don't even have to be a member to do that. So come over. If you join up for the Research Center, you'll get all of our nightly setups. You'll get our nightly videos. We put out at least one video a night. You'll get all of our learning tools. And by the way, Michael, this Saturday I am hosting an In the Money Stocks methodology webinar. It's going to be a 7-8 hour boot camp. So if any of your listeners want to come over, just click the webinar or the education button on the homepage of the website, and you'll learn all about our webinar that is this Saturday.
Okay, great. Send me a little reminder, and I'll put it into the blast for you.
Thank you very much, Michael. I will do it.
All right, everybody, that was Nick Santiago, President and CEO of InTheMoneyStocks.com. This guy's a heavy hitter on our show. He's done some very, very good trading here.